Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City this week without a hurricane. It is the 11th day of August 2020. Before I talk more about today's show, let me remind you that I am the author and editor of Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that letter by going to miningstocks.com. We always like to plug Chen Lin's letter, What is Chen Buying, What is Chen Selling? Go to chenpicks.com for that. And we also like to put in a plug for Michael Oliver. It's olivermsa.com. Michael won't be with us this week, but he will be our main guest next week. So a lot of you have been complaining about not enough time with Michael. Might be happy to hear that. I do want to thank all of you for listening, and please send along any comments, positive or negative, or whatever they may be, to questionsfortaylor@gmail.com. Questions, the number 4, Taylor@gmail.com. Our sponsors for this week, which make this show possible, our sponsors are Benchmark Metals, NV Gold, Hannon Metals, Irving Resources, Novo Resources, Sitka Gold Corp, and Lion One Metals joins us this week. With the price of gold down more than $110 a little while ago when I looked at the markets, and silver down by, well, that's gold down by more than 5.5%, and silver down by more than 14%. That was down $4 a little while ago. I'm sure many of you are wondering if the bull market in gold and silver is over. One can never say never, because there is always a first time for everything. But earlier today, Alistair McLeod provided some guidance on King World News that I think is worth listening to. Here are a few of the points he made, which are very much consistent with what Alistair has been saying on this show in recent appearances. First, he noted that we have had a massive rise in the price of gold and silver over a very short period of time, and it is likely that some hedge funds have simply decided to take some profits and to just to reduce risk, because we've seen such a massive rise so rapidly. And the fact that there is a shortage of metal at the LBMA and COMEX to satisfy the growing demand for physical metal, as growing numbers of investors are not interested any longer in taking futures contracts, that's a note that Alistair really emphasized. Now, after a day like today, perhaps there will be some pressure taken off of the physicals, and maybe that is the goal of certain interests in, no doubt, using paper to drive the price lower today, which is a game that the bullion banks have been playing for years. But Alistair points out that the bullion banks are horrifically, really short, horribly short, as Alistair believes there will likely be one or two major systemically important banks in Europe that will exhibit some liquidity issues over the next couple of weeks. He detailed the supply shortage, not only for gold but also for silver, and he noted that a lot of people who think they own gold and silver in ETFs that have been unallocated, those are ETFs without allocated gold and silver, may find themselves deeply disappointed when the markets realize that the cupboard is empty and the unallocated people come up empty anyway. Alistair compared America's current position with that of John Law's Mississippi bubble, which he's done on this show a number of times, and he said the only exception is that what we are facing now is hundreds of times larger than what was faced 300 years ago with John Law's Mississippi bubble. But the comparisons are completely alike, according to Alistair, and there's nothing that the Fed can do and nothing that they could do back at that time that John Law could do except to issue more and more money faster and faster. Keep in mind that there is no end of the trillions of dollars that need to be created to keep interest rates from rising, because in order to keep the system from imploding, interest rates can never rise again until the current system fails and a new one, hopefully one built on sound money, is created. So those are some of the points that I got from Alistair's discussion this morning. The market started down pretty big. I think gold was down $60 an ounce early before they opened in New York. And as I said, they're down more than $110 on gold, and silver getting hit even harder. Of course, silver has been rising dramatically in recent times as well. If you doubt Alistair's position, I would encourage you to read his latest essay at Gold Money. That's goldmoney.com. Go there and read Gold at $2,000, So Why the Fuss? In that article, Alistair outlines structural changes in the markets that show just how acute the squeeze is now for the acquisition of physical metals. The paper contracts that demand the metal have been created out of thin air by the financial system. As long as investors remain confident that the financial system and everything is honky-dory, the casino can continue to operate by creating money out of nothing and playing games. Back and forth they go, buyers and sellers in the futures markets. But when investors who are long, they want to find out, they want to have take delivery because they no longer have confidence in the monetary system, then it's game over. And Alistair thinks that day for the dollar is very near at hand. And given the box that the Fed and other central banks have really painted themselves into, the only thing they can do is print more and more money faster and faster. Now, again, days like today may take some of the pressure off, but the fundamentals of where we're at in the U.S. economy hasn't changed. Please don't buy the notion that central banks can continue to print money, massive amounts of money, because there is no inflation problem. Well, Daniel DiMartino Booth pointed out in her Daily Feather publication this morning that food prices in America are rising by 5.6%. In China, they're up 13.3%. Prices for manufactured goods in China have fallen a bit because of a lack of demand globally because of the global depression. But unemployment, massive unemployment in America, people can't pay their rents. We're seeing the Fed and we're seeing fiscal stimulus. I wouldn't even call it stimulus. It's just money that's being created to try to hold the system together, to keep social order in place, actually. And by the looks of things in Chicago and the other main cities, that's not helping all that much. We're seeing huge amounts of anger from groups like Black Lives Matter and Antifa that are clearly more interested in chaos than in fixing things, or at least maybe they've lost hope in the system. Now, my friend Chen Lin, who is a much better trader than I, sent out an email to his subscribers this morning essentially saying that he's happy for this pullback in gold and silver, noting that he had taken some profits recently and was waiting for a chance to buy some of the stocks back that he recently sold. Along those same lines of thinking, I took advantage of the smackdown in silver earlier today to buy some SLV this morning. However, I would have done well to wait until later in the day, that is for sure, looking at things now. On another note, we have a lot of complaints from listeners that I don't give Michael Oliver nearly enough time on this show. I think that is unfair to me, and especially to Michael, who is already giving you more than you're paying for. Michael used to be on with me every week, but quite frankly, like most of us, working without pay is not an option. Michael has limited himself regarding the amount of time he has on this show, and you have to realize that I need to interview sponsors as well, because that is how I get paid. Anyway, Michael has agreed to come on my show next week as my main guest, so you will have more time to listen to him. And if you have some questions you'd like me to pass along to Michael, feel free to send them along to questionsfortaylor@gmail.com, questionsfortaylor@gmail.com. Now, let me just make one further remark about sponsors on this show. The sponsors on this show have been handpicked by myself, and they, in every case, are companies that I personally have purchased shares in. They are also companies that I have recommended in my newsletter. So while they do pay the freight, and while they do allow me to get paid, I must emphasize the fact that there's a select number of companies that are sponsors of the show. And especially in strong markets like we've had, it's very easy to be selective and to pick out companies that are really the cream of the crop. And we'll be talking to Quentin Henning in just a little bit about one of those. That's Lion One. Just a word about my course that I've been advertising, talking about here on this show. I've titled the course Investing 101, Gold and Silver and the Miners. Now, the first lesson, there will be 5 lessons in this course. The first lesson is titled Setting the Table for a Once-in-a-Lifetime Bull Market in Silver and Gold. And yes, I believe that's still the case, notwithstanding today's pullback. The second lesson will be a post-COVID-19 world and a fourth turning, demise for America and the U.S. dollar. The third lesson will be different ways to own and invest in gold and silver and the mining shares. And the fourth lesson will be the basics of mining economics. I'll explain what you need to look for as companies are exploring and developing deposits, what you need to look for to give you a hint at potential profitability and why those stocks that are discovering deposits might do very well in the future or not do so well. The fifth lesson, I'm going to have guidance from two professionals. Dr. Quentin Henning will be with me, and Chen Lin as well. Dr. Henning, who is considered perhaps the most creative exploration geologist and one of the most sought-after exploration geologists in the world, will explain what he looks for before he gets involved in investing in various projects. So lots of companies want Dr. Henning to work for him, but he's selective as well in terms of what he will look for to get involved in a particular project. And Chen Lin will share some of his successful trading techniques with us next week. The price of the course will be $689 US, and you will receive, however, part of that, a 6-month free subscription to my newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. I still have to record the 5 lessons, and so I hope to do that within the next 2 weeks. Given the time it will take me to complete this effort, in a way, I'm kind of glad also, along with Chen, that the market has pulled back. Hopefully we'll have a little period of sideways movement here and a much better entry point for you, for those of you who are not in these markets, to get in. I've titled today's show, Take Cover, It's Too Late to Turn Back. Doug Nolan and Quentin Henning are my guests. Dr. Henning will be with me in just a few minutes to talk about Lion One Mines, Lion One Metals. It is a story that is really a fantastic story, one that I think has a chance to be a world-class Tier 1 gold deposit that's being developed in their mine in Fiji. In the second half of today's show, Doug Nolan will be with me, and Doug will talk about the current markets and why it's too late to turn back, why the central banks have no possibility of returning to normal. You know, the Fed tried to return to normal, tried to normalize its balance sheet. Chairman Powell tried that. And as soon as interest rates started rising just a little bit, the stock market had a hissy fit, and there's nothing that he could do but just to start printing money, quantitative easing once again. And we're at and getting very close to zero rates in the United States. Of course, countries around the world are in negative territory already.